Hey, John Higgins, Mortgage One. Happy Monday. So, I wanted to cover what we saw last week in the market. We've got a couple conflicting numbers, maybe, especially on the employment side. So, there is this number out there called the JOLTS report that basically is the number of open positions looking for an employee. That JOLTS report this previous month came off 1 million. So, there's 1 million less jobs to be filled than the month before. That's interesting, right? So we've seen wage pressure be a big component of our inflation battle. And as the number of open positions kind of falls, that is pointing to a bit of a weak labor market. At the end of the week, we got our all-important jobs number. So that came right in line with expectations, about 250,000 new jobs. And that has been pretty consistent. So the thing inside of the jobs report that probably maybe a little more inflationary. We saw the unemployment rate drop from 3.7% to 3.5%. So we know that inflation is the number one enemy of interest rates. And the Fed is doing everything it can with these rate increases to push interest rates higher, basically take out some of the momentum that the economy has, probably looking to push us into a recession, but certainly trying to slow the job market. We saw a little bit of that maybe on the JOLTS report, but we look at the all-important employment number that came out this past month, pretty strong still. So 250,000 jobs on a monthly basis is still a good number. What is this doing to our real estate market? So we are seeing right now the highest rates that we've seen in a couple decades. The mortgage market has slowed. I think we're going to have the worst year that we've had in the last, since I think 1994, 95. And that is starting to show up on the housing side as the sales that are happening, slowing dramatically. Prices are starting to dip. I think price reductions are at a multi-level or multi-year high here. So, marketing these properties, getting buyers into them, all that much more difficult in this marketplace. You got to be much more creative on the marketing side. As we head into the last quarter of 2022, right, this has been an incredibly difficult year. We're basically gonna have to fight some of the highest interest rates we've seen in a very, very long time. So, if you need some creative ways to try to shoehorn buyers into deals using buy downs, down payment assistance, those types of things, certainly give us a call. There are ways to get properties that have been sitting moving, and then buyers that maybe have been sitting on the sidelines. Basically looking at these interest rates and thinking maybe now is not the time to buy. Rents are still up. So when we compare that payment that they're paying on a rental side to a payment that they're going to get for a new purchase, if the difference isn't that great or even might be coming down a bit because rents are so high, these are the people we need to attack. So if you have any questions, certainly give me a call. Have a great week.